What's going on, YouTube? This is Dave's Daily Trades. We're bringing you daily AMC technical analysis, price predictions, and of course, the latest greatest news. In today's video, we're going to be going over some AMC flows with unusual whales. This is one of my favorite tools and actually my first day using this product. And we're just going to be taking a quick look at all of the call and put data coming out. Of course, we're going to be going over some issues with the overall economy, especially in regards to the debt limit. And all the talks going around about this. And looks like some funds and big institutions are actually preparing for worst case scenario here. And of course, Yellen has been coming out really yelling about this, and that's the pun right there, yelling about this big issue that's going on about the debt ceiling. Of course, some other issues about leverage going on that Yellen is again yelling about. And then lastly, we are going to be going over the daily Treasury statement and what this is looking like. But first, as always, we are going to start off today's video with a quick technical analysis on AMC. Here we go into the intro. All right, so on to the AMC technical analysis. So what I do have pulled up here is the one-day chart for AMC. And right now, yes, we are in a little bit of a bearish stage for AMC. This has happened since 9/13 until present date today, the 28th of September. But a few good things that I'm looking at on the charts right now. The first thing is I do have the, if we zoom out quite a bit, the Fibonacci retracement starting at the low over here on January 5th, 2021. I know quite a while back, but that's when we hit our low of $1.91. And I have this retracement set all the way to the high put in on June 2nd, right at $72.62. Now, some interesting things that I want to point out is first of all, we have had that touch point successfully on the 61.8 level retracement. This was put in on 8/5/21, and since then we have started to move up, but we did come in between this range of the 23.6 retracement and 38.2 retracement. One was unable to break through this range right around $55.94. So we did come back, but the beautiful thing is we today touched perfectly on this 50% retracement level. Now, we'll take a quick 1 minute look into this real quick. So as of course, what happened today, just start off in the morning with a trend all the way down to a low of $37.25. Now, we did leave a little bit of room until this 50% retracement level. That would be located right around 37.06, but we are very, very close to this range. Now, of course, looking back at this one-day chart, it looks like we may have a little bit of downward pressure to go. Looking at the RSI and the MACD, and I did that opposite with my my clicker here. Anyways, what I'm looking for is, yes, we have had this MACD crossover and since have been trending down. But I believe that we are only going to have just about 1 or 2 more days of selling pressure, and we should hold this resistance line right around $37, $38. That would be absolutely ideal. That would give the RSI a little bit more room to run. And it looks like recently we have been putting in bottoms right around the 35.85 on the RSI scale. So if that holds correctly, that 35 point whatever on the RSI, we would come down, touch this 37.03, maybe trade around this flat for a couple of days, and then start our next reversal, giving time for the MACD to cross over and the RSI to bounce on that low and start to trend higher in that direction. So really, that's what I'm looking at for the technical analysis for AMC. I would say my price predictions for this week is I really want to see us put this recent bottom in. I believe that bottom's going to be in at $37, like I previously said. And then once we do, we are going to start to make retest at this $55 region. Now, once we do have the momentum, the FOMO, day traders and swing traders start to pile into AMC, that is really when we're going to start ripping through these levels and start to cause this run up that we saw back at the end of May and early June. Now, we're not quite at this range where this is just going to start to go parabolic. I really believe that we are, I'm going to say, weeks away from this. I know that's a very vague time frame, but what I'm really getting at is we still need to break a couple of these key levels to really determine when we are going to have that breakout. So no dates until further notice, guys. We're going to be sticking with this. Anyways, looking at unusual whales, I do have the flow put up for 9/28, which of course is today. Now, a lot of large premiums that are being printed. Right now, what I have set up is a custom filled for really big premiums. I believe I set it over 1.5 or just over $1 million for the premium. And of course, what we have is pretty split data. Of course, yes, we do have those bearish contracts being printed, but on the opposite side, there is quite a few of bullish sentiment out there in the market. Now, really, there's no secret sauce to any of this. I really just want to give you a high-level overview of what the option contracts look like, and that kind of references back to where we at with AMC right now. We are at this 50% retracement, so no wonder why we have just about a 50-50. I know it's not perfect, but just close enough to a 50-50 split on bearish and bullish with large whales out there. Now, some really interesting things, and this is stuff that we've been talking about for months now, guys. Of course, the debt ceiling and this debt limit that Congress is taking their time with right now. So this is on Twitter, Walter Bloomberg, and I will, of course, take the links and put it into the description so you guys can go and interact with this, read some of the comments as well. But anyways, just to sum this up really quick, exclusive JP Morgan Chase & Company has begun preparing for potential U.S. credit default. So, of course, what the U.S. Credit default would happen is if we run out of funds and are unable to pay off our debt, that would be a credit default. And of course, if you're not aware, that is extremely bad for the economy, guys, and especially the overall stock market, because stocks would plummet if that happens. So it looks like them preparing for this could be a lot of puts on the SPY, the triple Q, something like that, or just shedding off some of their long positions to have cash on the sidelines, which is always good in times of uncertainty like this. So I do want to come over and just talk about Miss Yellen yelling about the default looms right now. And really her biggest point here is it needs to be raised by October 18th. And that is when she predicts that the Treasury is not going to have the funds to pay off that debt. So, of course, this coincides with this last article right here, and really looking like October, the middle of October, is going to be extremely shaky until they figure this out. Now, of course, going back in history, 10 times out of 10, they do raise the debt limit and the debt ceiling. But, of course, we are in a different economy. Different things are happening right now, and the amount of spending that has gone on throughout 2020 and 2021 has been enormous, guys. So Republicans are the reasons that this is being held up, but of course there are some other factors going on as well. Now, real quick, I want to play this. I believe this was on CNBC. Not 100% sure, but just listen into this clip right here. It's just 16 seconds.
There are issues relating to hedge funds and the possibility of leverage there that can trigger financial runs. That's another topic. And
all right. So that should have you extremely excited. Essentially what she's saying is there are over leveraged funds out there that may cause certain stocks or securities to run. Now, of course, she doesn't come out and say AMC, GameStop, BlackBerry, all the other meme stocks. But really, my take from this is she's insinuating that these over-leveraged firms are, or quite possibly in the near-term future, could cause some of these securities to go absolutely crazy. Now, of course, that's the Treasury Secretary right there talking about it. certainly a very important person, but of course, just more sentiment to make you excited for what's around the corner, guys. Nothing is set in stone. But just a quick look at the daily Treasury statement. This was posted on Friday, September 24th, so just 4 days ago. And of course, this data does lag quite a bit, even though they say it is daily. So what we have here is the closing balance of Friday was just about at $215 billion. And the last close on this was $173,922,000. So to sum that up, looks like they have a higher balance than they did on Thursday, what was Thursday? Thursday the 23rd. And this could be by selling junk bonds and junk securities, whatever it may be. But of course, it really didn't move the needle quite that much to be that much of important. And this goes back to, where are we here? Yellen saying that we need to raise this debt ceiling by October 18th or we are going to default. So of course, nothing is certain, guys, but you know, if it is not raised, that's when our case for AMC and GME just goes absolutely absurd. And that is truly what I think is going to start to cause a lot of those margin calls for those large hedge funds that, of course, are short AMC and GME. So, guys, it's good to be back. I'm sorry for being gone for just about the past, 4 or 5 days. If you don't know, I was just dealing with some funerals and just flying family in and, of course, all that fun stuff. But I'm back now. I'll be back posting every single day until we see shorts cover. All right, peace out, everyone. Tune in for the next video and subscribe for more content. Peace.